Evgeny, welcome to the show.
Pleasure to be here.
So I think there's a lot going on in your world, both geographically, physically, and then I think also in the investments that you're active in. So obviously, the UAE, Dubai has been in the news for the last couple of months, and then over the last couple of weeks, we've seen quite a bit of action in DeFi markets. So I'm really excited to talk to you today about what's going on in those two different areas. So, but to start, maybe we can do a quick introduction to Re7, what you guys do, and what your focus is.
Yeah, of course, with pleasure. Re7 is about 5 years old today. It started as a firm focused on running DeFi yield strategies in a hedge fund manner, where we've packaged it up as a market neutral open-ended yield fund. So to traditional investors, it looks like a very familiar structure, but then the capital is deployed on chain within DeFi earning yield. We took a view that being paid to take on smart contract risk is a good risk return trade-off and gives you access to very idiosyncratic and uncorrelated sources of risk and sources of P&L. Fast forward to today, we run yield strategies on stablecoins, BTC, on ETH, as well as directional liquid and venture strategies. And then our sister company, Re7 Labs, has been setting up vaults and other type of DeFi infrastructure. So we've grown to be one of the larger and most active players in the DeFi space.
That's great. Well, and thank you for correcting me on the pronunciation. I've always said Re7, but it's Re7. Where does the name come from? What does the name mean?
Like at some point I got blocked when I was setting up the company, because I was supposed to file paperwork and was getting blocked because I couldn't come up with a name. So it's a chess reference where it stands for Rook to E7, which is a specific chess move. There's only been one chess champion to have ever died undefeated, and he became the world champion after making this specific move in a specific game almost 100 years ago. And it was a personal inspiration for me as I used to do chess competitively when many moons ago.
Oh, that's interesting. Now the logo makes sense too.
There you go.
It's all coming together. All right. So other than being a chess player, you spent a lot of time in traditional finance as well. What did you do in the old markets?
Yeah, I started my career in the hedge funds working as an analyst covering European stocks and do some emerging market stocks as well. And then UBS and Deutsche Bank on the investment side. So very traditional investment management across funds and banking.
So you were an analyst or were you trading?
Well, I started as an analyst, then I was given a book to run. And then when I was in banking, I was basically advising foundations, family offices, and those types of clients on multi-asset portfolio allocation.
And how did you end up in the world of DeFi?
Like most of us, by accident. I was working in UBS at the time, and I was allocating my weekends and my evenings to educate myself on tech. And through that, in 2014, I came across blockchain, which resonated with me. Because, with full transparency, when I first read about Bitcoin in 2011, 2012, it didn't really click. I didn't truly apprehend what this thing could be. But having read about blockchain, I got quite excited, was diving deeper. And then in 2015, I started going to Ethereum meetups, and that truly blew my mind. So eventually I left banking to join a blockchain startup doing enterprise blockchain for supply chain traceability. And eventually, like all of us, played in the space and then discovered DeFi, started playing with it, more and more and more, and got completely hooked by this new value proposition and this promise of, us rebuilding a better version of finance.
Oh, that's interesting. And then somewhere along the way, you ended up in the UAE as well.
Yeah, that's right. We moved to UAE from the UK a couple of years ago.
So when I saw you last time, so I guess the last time I saw you was in El Salvador, and then before that it was in Abu Dhabi actually, and you were based in Dubai, I think, around that time.
That's exactly right.
So how do you feel about what's playing out in the UAE right now? I guess we see very conflicting stories on what's going on. What's the sentiment like in the UAE at the moment, and how do you see that playing out going forward?
Well, I'll start by throwing out the disclaimer that I know nothing about geopolitics, and then probably like the last person to ask for that.
It doesn't stop me from commenting on it.
Exactly. So obviously, there was anxiety when the whole thing started, but
Yeah. Were you there when it was kicking off?
no, I was on the road, so didn't get affected. But obviously, lots of friends and some colleagues were there. Now it feels like it's basically back to normality, back to business as usual. Obviously, yeah, very unfortunate, and I don't think anyone truly understands why those attacks were made. But again, I don't have too much depth of knowledge of those types of geopolitical items and issues. But so far, you each done just an incredible job. Like if you actually look at the statistics, and like when you there is a reason why lots of people went to that country, and even with this new risk overhang, it's still not very clear where else you can go if you're trying to escape. So it feels like it's back to normal. There are obviously nuances and implications, but if anything, it just goes to further validate the need to have strong domestic economy that is more or less independent from the commodity sector, and it's reasonable to assume that those investments will continue to be made.
Yeah, I mean, it's really unique in terms of capital centers as an up and coming jurisdiction, much more friendly to crypto. I think a lot of people in the traditional kind of capital centers were happy to see some volatility and trouble in the region, right? Um, but what do you think? What do you think are the attractions that brought people over to the UAE and to the region in the first place? What was the pull factors?
Well, it's an extremely lifestyle wise, it's an extremely safe place to be. You can, everyone who I've spoken to who's lived there for 5, 10, 20 years and more, feel extremely comfortable there. So that's an important consideration these days, especially if you're coming from Europe. Secondly, it's an extremely pro-business environment with a very supportive, regulator and just the whole ecosystem of institutions that exist there. So, safe place, good weather, if you don't count the heat in the summer, uh, friendly tax environment, a friendly business environment, that's just perfect. And also what I feel has been happening more recently is a whole ecosystem emerged there. Because Dubai today versus Dubai, 15 years ago, are two very different things. Right now, most of the top hedge funds in the world, and I'm not talking about crypto, I mean like traditional markets, they have some presence there. And when you have that, then you have law firms that are servicing them, so on and so forth. And yeah, it's just the whole ecosystem has blossomed there.
Yeah, that's interesting. I guess it's like anything, like manufacturing or semiconductors in Taiwan is once you get that ecosystem built up around it, that it just becomes kind of a flywheel really that keeps things going and it makes it go even faster.
That's exactly right.
So what do you, I guess, so you feel like this probably isn't a dent in the economy. It's a bump in the road for ADGM. There's still like a strong demand out there for what they have to offer. And, we're normalizing and things will probably continue along the same trajectory as they were previously.
I think that's a reasonable assumption. Obviously, with these things, you never know. But like I said, I just don't know where else you would go to try and if you're trying to build, a business in the digital asset space, you don't have too many options right now, and UAE continues to be a very valid choice.
Yeah, I think that's kind of what we're thinking as well. So, Bitfinex Securities, of course, we're in the AIFC, which is, kind of a cookie cutter really of the DIFC. And we're also in El Salvador. And we're looking to ADGM as well as, kind of really unique within the ecosystem, as you said, of like a crypto friendly jurisdiction that also has deep pools of capital. I mean, it's one of a kind, really.
100%. That's exactly right.
How would you rank it versus the other kind of crypto? I think Switzerland comes up probably in the conversation. How would you rank it amongst global jurisdictions for the business that you're running?
It's a good question. I just feel it's very different. Like New York is incredible because New York is New York, right? Switzerland is great for its own set of reasons. Um, I haven't frankly been there in a while. Obviously, you have very deep pools of capital there as well, but I'm not really aware of a great many digital asset startups blossoming there at this point. So I feel it. It just depends on what you're after, right? If someone is after, if you're trying to build, a stablecoin business and you want to win traditional institutions, New York is a valid place to be. I know Hong Kong or Singapore, someplace in Latin America, to your point, and then UAE is a very, very, very valid place to be. Building exchanges is a little bit different, so I think it depends. Like the ranking, I think is a function of like your business and what your business needs.
Yeah. Shifting gears to DeFi, can you give us a very high level rundown? I'm not a DeFi guy at all, but can you give us a high level rundown of what's happened over the last couple of weeks?
Sure. Yeah, that's the thing about crypto and DeFi, that there's always drama, and because it's a place that's a bit less well understood, there is more reason to to have that drama, because people don't fully comprehend the magnitude of the risk and the nuances. So DeFi is a very straightforward thing. There is a well-known set of risks that you take, smart contract risk or just cybersecurity risk being the main one, and you get paid for taking on that risk. And once in a while, hacks materialize and DeFi platforms get broken, assets get stolen. The way how we think about it is the same way how a credit analyst would think about these things. If you're giving out, one loan to one individual, you run an extremely concentrated portfolio, right? And if that person defaults on the loan, you get wiped out. If, however, you give out loans to 1 million people and you give them out across different jurisdictions and different, for different types of purposes, and you ask people to fill in, mortgage application forms or whatever, and then you assign level of risk to people, AAA, AAA, CCC, then you run a very diversified portfolio where you'll get some expected annual rate of default, but that's okay because you model for that and your interest rate kind of, accounts for that. So that's how we think about DeFi, that these things, these risks materialize and occur here and there. So the job is to quantify them, to model them, to understand them, and to run a diversified book. And normally there are hacks that happen in DeFi with certain level of frequency. Historically, when we started, those levels of hacks were 10 to 15% a year, but the yields were 40%. You're like, okay, I'm making 40, I'm losing 10, that's okay. Over time, these rates came down because the industry became more secure. So it went to 5, 3, 4%. Right now, it's kind of, even with these recent hacks that took place, the kind of annualized run rate is about 2%.
3%.
2%. 2.
Wow, 2.
Yeah.
So all of that risk for 2%.
So to clarify, the 2% number, if you look at all the hacks that happened year to date, and you annualize that, you're at the 2% annualized default rate.
Okay.
Which means that as long as your yield is above 2%, you're making money. That's what we have today. So to give you, before I go into further depth as to what's happened, at the scene about the magnitude of these events and how impactful they are. That even though this news is always scary, the actual magnitude of the impact is like having a 2% default rate in your credit portfolio.
Got it. Oh, okay. Sorry, I misunderstood. Got it. Okay.
So then, with regards to the events of the last few weeks, specifically, there was a specific platform. Well, actually, there were lots of small hacks, but the one I assume you're referring to, there was one specific hack where assets of one of the staking protocols got stolen, allegedly by a state-sanctioned, kind of state-sponsored actor, which is a well-known threat in our space. And even that's obviously that's sad, but that's not something we haven't seen before. The reason why this event made the news is that this specific asset served as collateral in a variety of DeFi lending platforms, which mean people were lending against it and there was embedded leverage in the system. So you have a specific asset that gets basically stolen. There's a lot of capital that was serving as that was being lent to that asset collateral. Therefore, there's a cascade and a magnifying impact to those things. Historically, people in DeFi viewed some of the lending platforms as basically risk-free. So the idea was, putting money into a specific platform is like putting money on a bank account, which is as long as the bank is more or less well known, is almost risk-free in people's minds, and everything else was risky. So therefore, imagine you're a depositor in a bank and you thought this was risk-free, and you wake up and you're like, oh my God, there can be a hole in the balance sheet of this quote unquote bank.
Yeah. So there's a bank run.
You get terrified. Exactly. There's a bank run and you get terrified. And it seems at this point in time, it seems that no one will actually incur any losses because the kind of the ecosystem came together, basically organized like a bailout fund, which is pretty incredible to see, frankly. But I feel that the events that took place are actually nothing new, and as like platform gets hacked, an asset becomes unbacked. If you lend against an unbacked asset, you lose, you take a loss. This happened time and time again. The difference is this time it happened to some of the very well-known platforms, which people consider to be risk-free. And there is nothing wrong with those platforms. What is wrong is how people assess the level of risk premium. So the way how we think, we don't think there's anything that's risk-free in DeFi. That concept does not exist in our mind for a variety of reasons. And if your starting point is that nothing is risk-free, then you build a portfolio, and and you run a diversified book, and you manage your risk. And from that standpoint, there is absolutely nothing that's new. So in our case, for example, we didn't have any exposure to that unfortunate event. And even if in the worst case scenario with no bailout and lots of cascading negative effects, the negative impact, like our VAR, like our value at risk, would have been less than 2%. So no. So my point is simply the only people who got caught off guard with this are those who had concentrated exposure to something that they consider to be risk-free, which just has never been risk-free.
Where is the main demand? Where does the main demand for DeFi come from? I've kind of got this idea that a lot of it comes from the US because US investors are kind of walled off from a lot of global crypto exchanges. So they get pushed into DeFi because of, lighter KYC and AML. And I think also I've read to India because of capital controls. Is that true? Do you think that's part of the picture?
I think demand is pretty global. Firstly, DeFi. Well, so firstly, who are the categories of people, right? So you have categories of people who have been in crypto very early on. They accumulated some wealth. In some cases, it's enormously large. In some cases, it's more humble. And they've kept this money on chain historically, and it's just more convenient for them to, put USDC on a deposit into a lending platform than to put into fiat, open a bank account, and deal with that. That's number one. Number two, DeFi gives you use cases you can't get elsewhere. If you have a large position in ETH, for example, it's very easy for you to take a loan and go buy a coffee or do whatever you want with it. Then there are people who are building and experimenting and trying to scale it. Then there are funds or just professional traders who do this for a living. And then more importantly, and frankly, more inspirationally, DeFi is continuously getting more and more integrated with the traditional world. So the fear that I had when it came to DeFi many years ago is that, it's a super cool thing, but maybe it will always exist in isolation as a little sandbox. And we're all enthusiasts and we go and play there, but it never scales. But right now, there are some very well-known credit funds issued by some of the leaders in the global asset management space. And you can, go and buy those products on chain, and you can lend against those products on chain. You can trade tokenized stocks. And a great example would be trading pre-IPO stocks, right? So let's say you want to bet on Anthropic. If you're a wealthy individual, you can probably do some OTC deals in the traditional world with SPVs. But on chain, you can buy a version of that, tokenized version of that, very cheaply. Then the next point is, with the war in the Middle East, oil has obviously captured everyone's attention and imagination, and you can trade oil on the weekend. So if I'm a hedge fund running traditional risk, and it's Friday night, and I'm expecting that there's going to be a big announcement, I don't want to wake up to a market gap on a Monday morning. I want to hedge it on the weekend. So that's what you can do on Hyperliquid, where you can trade tokenized oil, and. So there are more and more use cases, and I feel it's reasonable to assume that DeFi will be an extension of the traditional world with more tokenized stocks, prediction markets, and many other things. And what we've seen in the DeFi space so far is just an MVP that gets us there.
Yeah, I think a lot of what you said is, it rings kind of similar to what we see on the, on a centralized exchange for tokenized securities. But how does KYC and AML work? Like, how does that part of the picture work for when you're trading securities?
So different people solve it differently. I think in the long term, we're going to have two universes that will exist. I think we're going to have a fully KYC and permissioned universe where blockchain becomes a back office settlement backend mechanism. You will continue to probably have this kind of completely open, permissionless DeFi space, which will be a sandbox. And someone builds a great startup, it gains traction and early validation in this open world. Then you find the right partner on the, let's call it, scale up side, and then you migrate and you have your version 2, which is permissioned. I think we'll have both of those worlds exist in parallel, and so people will be kind of moving in between. Because obviously historically DeFi has been completely permissionless.
Yeah, where do you see securities fitting into that? Because I kind of I think that kind of makes sense, but I think also that when things get to scale is when you get a lot of regulatory attention, and I don't think broadly regulators are too keen on bearer securities. So do you think that securities kind of migrate more from the a permissionless box over into the permission box, or how do you think that plays out over time?
Well, I don't think you can get a traditional institution to do scale and real size without them being 200% confident that what they do is acceptable to regulators, right? So I think we can expect the Wall Street institutions to do anything without full KYC.
Oh, 100%. Yeah, for them, for sure. But I mean, the people that aren't doing it now, will they become concerned that they'll be the target of regulatory? Like, the regulators typically take one cycle, like things get big and then they pay attention to everything the next cycle. So are the people who are not doing that now, like, I think there's a bit of a shift. I noticed it in attitude, and I wonder how broad that is. And, if people are worried that the next cycle, they're going to be, maybe in a little bit of trouble.
I think it depends on what your role in the ecosystem is, right? Because if you're just an individual with a wallet, you're trading tokenized oil, then I don't think
you're probably fine. Yeah,
you should be worried. You're probably fine.
It's more for the issuers.
Exactly. If you're an issuer, then you need to be more careful. And people have different structures how they solve it. Yeah, it's obviously not very clear. It's not clear at all, frankly. The DeFi's and crypto's approach has always been, ask for forgiveness.
Yeah, move fast. Yeah, break things.
Exactly, and move fast. So I would we're not really in that business, but I would assume if someone is in that business, they're probably getting some advice as to how can you do it right now in the absence of clarity, and how can you scale as much as you can as quickly as you can, so that by the time clarity is there, you can absorb some additional legal costs and migrate to a more compliant structure.
Yeah, that is the typical crypto model, isn't it? Yeah, for sure. Yeah. So what is the shake, like, after this big shakeup within the DeFi industry? Maybe it's not a big shakeup. Maybe it's something that just happens periodically. Like, what is the impact of this? Is it when some of the biggest and most trusted platforms turn out to be, maybe not as trustworthy as people thought? Like, what is the implication of that?
Well, firstly, I do think they're trustworthy because they haven't done anything wrong. It's just that one asset in the pool of capital was affected by something, which is normal, right? I think it's a signal that the ecosystem needs to grow up, because people are very used to getting paid yield and they're not comfortable taking any losses. In the traditional world, that you get paid and you take risk. No one pays you for just because they think you're a great customer. You take on risk and you get compensated for that risk. So what we've seen so far is a massive capital flight from the space, which makes sense, which is amazing for people like ourselves, because the yields that you earn are obviously a function of capital, which is a commodity, right? So capital is a commodity. The supply and demand balance or imbalance of that capital, of that rate, of that ratio, supply demand ratio, drives the yields. So right now we've had a lot of capital sitting in DeFi earning pretty low yields because people were passive, they didn't have anywhere else to go, and also it's just been a very bad market, especially since October last year. Lots of capital has left, which means that the rates are now up. So if you feel comfortable to continue operating in the space, within your risk kind of parameters, then that's a great opportunity for you. And my hope is that over the long term, this just wakes people up to the fact that there's nothing that's risk-free, and people need to be taking responsibility for what they do with their capital.
Sure. And you manage that with diversification and with positioning, I guess.
But that's the only way to manage risk.
What's your position on Bitcoin and yield?
I would call it non-philosophical. When it comes to any asset, different people view it differently, right? Some people view gold and Bitcoin as something they want to pass on to their grandkids. Others view it as a trade that they want to keep for 5 minutes. Some people want to lock their gold in a physical vault and hide away the key. Others keep it as margin. They keep margin with a broker and they trade futures. So when I worked in banking, I was kind of like UBS is obviously a massive player in the gold space, and I saw very different types of clients. Some people all they wanted was to have physical gold and never touch it, never see it. Others were trading calls and puts on their gold once a week, aiming to earn some yield. And these are often very different universes of people who view these things very differently. So when it comes to Bitcoin, like if we assume it's the next gold or like whatever, then obviously there are people who just want to put it on a ledger, hide that ledger somewhere and never touch it, which is fine. And there are others who view it as an asset, and they view it as an asset that has zero positive carry. And in fact, there is still some inflation with this asset, at least for the next few years. And on top of this, there are anxieties, there's concern about the quantum risk and like all those things. So and it's like a whole different conversation. Some people view it as an asset that is sitting idly. And if it's going up, 20-30% every single year, then you're like, oh, it's fine, it's just going up. But others, especially if it's a bear market, they want to turn yield because it doesn't feel like a productive asset to them. Bitcoin does generate any cash flow, right? Any dividend yield. So then some people opt in to deploy a portion of their capital into a yielding strategy, and then they acknowledge that they specific types of risks depending on what they do, and they're hoping to get compensated for that risk.
So what is your position? They're different people, different strokes for different folks.
Well, my position is, as an individual, I'm like most of my savings are funds anyway. I don't think about it that way. But I think when it comes to how people should be thinking about it, I think it's a very personal choice, frankly, because it's a philosophical choice. In my mind, there's nothing wrong with turning a non-productive asset into a productive asset, but then you acknowledge you take on the risk. And again, the best thing is to be diversified, right? So let's say you're holding, I don't know, 2 coins. Then maybe it makes sense for you to keep 1 coin well hidden somewhere in a safe, and then the other you can use as an asset, and then everything comes down to your risk preference.
Yeah, I think that's often the answer, isn't it? It's never binary. It's some kind of like a split in between. What do you think for the market this year? So at the end of last year, I was talking to a lot of people, and I said, "Do you think the traditional 4-year cycles? Do you think they're over?" I think almost every person I talked to said that they thought the cycles were over, and then kind of exactly on cue, we rolled right over. So do you think the cycles are over? What do you think is going to happen this year? I saw CZ tweeted today that we're into the Bitcoin hypercycle. And
that's good to know.
Yeah,
let me go buy a bunch of stuff then.
Yeah, I saw Van Eck today said $1 million. I talked to Samson last week. He said 1.3. So what do you think for this year?
Well, like all of us, if we knew, we wouldn't be doing podcasts. I think that's very good thing. Like my personal view last year was the cycles were a thing of the past. And to your point, we rolled over exactly on cue.
But maybe we're still right. Like maybe you roll over, but the bear part is the part that's different, right? Because we haven't come back as much or as painfully as we have in the past.
Exactly. I think that's exactly right, because we haven't really had the same level of euphoria we had, before. And there are many arguments for and against at that point. Like our view is that moments like this are when you buy. So the way how I try to think about this, because it's, you can go crazy thinking about these things. So I don't know where the market is going to go, obviously. But the question is, are we closer to a point where you should be selling, or are you closer to a point where you should be buying? That's kind of how we think. And if someone has no exposure to this asset class today, is this the right time to at least start accumulating? And if you have exposure to this asset class, is this the right time for you to keep holding or buying more or selling? And starting maybe with the altcoins and then going back to BTC. With altcoins, firstly, we need to acknowledge that 90% of them, if not 99, should be worth exactly zero, because there is no substance or intrinsic value to them. But there's a sufficiently large, well, it's pretty concentrated, but there's a meaningful pool of assets which are linked to underlying businesses, like Hyperliquid, Aave, Morpho, Pump.Fun, and so on and so forth. And there are underlying businesses that are doing reasonably well or very well, and yet some of those prices are down massively. So that's kind of on the fundamental side. You have prices that are down a lot, but some of the fundamental metrics are actually looking up. You have market sentiment that's been in extreme fear for an prolonged period of time, and you can see it in the data, and you can feel it when you go to conferences and you talk to people. And you have a pretty conducive market environment where liquidity is rising on a forward-looking basis, which historically has been supportive to assets. So we've had a set of horrible washouts, with prices massively down and the fundamentals looking to the upside. So historically, again, not financial advice, but these are setups when it makes more sense to buy than to sell. BTC obviously sits kind of above that, but if you look at BTC versus gold versus stocks, even since the Middle Eastern conflict began, it's actually up. So you can zoom out and you can say, well, we closed 2024 getting ready for like a euphoric couple of quarters. Then early 2025, with the whole tariff tantrum and all of that, everything got wiped out. Then the market spent a couple of quarters consolidating. I remember very well, 1st of October last year, it looked like we're, back to the races. And then, October 10 happened, everything gets wiped out, and then there's a bleed out that lasts a few months. But since the year started, we had the final flush out in early February, the prices on absolute and relative basis have been on an upward consolidating basis. So when you see a horrible flush out, consolidation with a skew to the upside and positive fundamentals, it's hard to justify selling, unless obviously we're not locked down, and then we'll get surrender and we acknowledge this is the end of it.
I also think it's like the investment banks too. When you see some of the bigger players in the industry letting people go, I feel like we're closer to the bottom than we are at the top, because investment banks are always famous for like hiring everybody at the top at the exact wrong time and then firing everybody at the bottom and being understaffed.
That's very fair. Yeah, and to your point, we saw the Coinbase announcement 2 days ago, right? So I think that's very, very natural, right? Because you have a cycle of business decisions that lags the market cycle. So you see the market, you give it a few more months, you see it's not getting any better. You're like, well, maybe I need to cut some people. You spend 3 months thinking about it, and then by the time you cut, it's kind of the bottom. That's very normal, and it's not because people are making bad decisions. Just that's how decision cycles work. So I think that's fair.
Well, that's great, Evgeny. I appreciate your time today. We covered a lot of ground. So thanks for your time. Anything else you want to say before we wrap it up? Where can people find out more about you?
Re7 Capital. We have a blog, and obviously socials. So people are welcome to subscribe. And the only thought I'd leave us with is, when it comes to DeFi, the events the last few weeks have been nothing new. And I would bet that the space survives and continues to grow.
Stay calm and carry on.
There you go.
All right. Thanks, Evgeny. Take care.
Thank you, Jesse.